I'm changing my tune on my bearishness just a bit. And why, after being bearish for so long, would I decide to do this? Well, let's explain this year why I was bearish the entire year. I was bearish the entire year because I thought there was a large dispersion between where, it seems that was correct, between where the market was and where the Fed was going to end up. The market was, up until the last week or so, expecting several rate cuts this year, expecting a lower terminal rate, expecting possible pauses and pivots, et cetera, et cetera, et cetera, various times. But now it seems like we've gotten to a point where there's a little bit more certainty around what the Fed is going to do and a little bit more unpredictability that all of us must share. So I think a potential arbitrage that was present throughout last year, and that was present, at least I was under the impression was present most of this year, is no longer the case. And I'll explain that in a second, but I just want to say I'm not completely bull mode, and I'm not completely not bearish. And I'll explain that after I continue on this point. So what changed? What changed today was the fact that after a couple Fed members, very important Fed members, pretty decisive Fed members, before the jobs data tomorrow, decided to talk about a Fed skip with a high degree of concern and certainty, and it basically pencils it in, okay? It basically pencils it in. And that was followed up by Bullard, who says we're at the low end of sufficiently restrictive. We know Bullard is the most hawkish member on the Fed. We know there is a 5.5 to 5.75 dot that goes through all of this year and all of next year. That's most likely Bullard. And he is following that up. Now, my inclination, based on having read that, is he's trying to follow that up, saying that we should skip a meeting. Why should we skip a meeting? He's not saying that this is a pause, that this is the peak rate, and none of them are. Jefferson isn't saying that. But there are signs of economic deterioration. Dallas Fed manufacturing, various areas of the consumer economy. You look at Target, even before all this random stuff that's happening, other areas of the economy definitely showing. People going to Walmart more than Target, for example. And Bullard's not saying, he's saying that we're at the low end of sufficiently restrictive. So it's possible that we're sufficiently restrictive. So let's skip this meeting. Now, I think the lagged effects, and this is, again, why they're skipping the meeting, are going to continue to take hold. I think the economy is going to weaken. I think real estate values are going to continue to deteriorate. And that's going to lower consumer spending. It's going to constrict the economy. I don't think it's going to be good for earnings. So I don't think it's necessary to get bulled up. You know, I really want to buy Disney stock, but I think that stock's going to deteriorate more. And it's not super attractive on a valuation basis if they're not going to continue to grow Disney Plus. So anyways, I'm sharing with you my reasoning for toning down the bearishness a little bit, not making it such a pure bearishness, but making it myself a little bit more of a pause, a little bit more of a let's kind of see what happens. Because I think, you know, Mike Wilson has talked about this notion of fire and ice, the fire being the Fed and the ice being the economy. And I think now we have done a lot or most of the fire. It's possible there's another hike or two down the pipeline. But now I think we're going to get into the ice part. And the ice part is going to be a little bit more specific, a little slower to play out, a little bit more unpredictable. And I don't think it is a pure, the same kind of pure bearishness that we've experienced in the past. So I'm going to do what the Fed's going to do, and I'm going to pause, and I'm going to see how things play out. I think a lot of stocks are expensive. I think they're expensive even if the economy doesn't move at all. I think Apple at basically an all-time high valuation relative to earnings. with earnings that are slowing and earnings that are lower doesn't make a whole lot of sense. Doesn't make a whole lot of sense, especially when we just came out of an all-time high where it was a Goldilocks literal boom, not just in terms of the stock price, but also in terms of the fundamentals. And I don't think those exact fundamentals are going to return in the same way. I think the cash flow they generated then was very special cash flow. Now, they are buying back stock. It's difficult to go short, but for that stock to be as high as it is, I think it's questionable. And I'm using that as an example because there are, in my opinion, other stocks around that are like that. But at the same time, we also see weakness in the RSP, the equal weighted S&P 500. So maybe it's not so much of a concern. Anyways, at this point, I think it warrants being way more business specific, not being so macro focused, because it's gonna be very interesting, very unpredictable. And I think that's why the Fed is skipping, because it's going to be very unpredictable. So let's just see what happens. I'm definitely toning down my bearishness right now. I'm still bearish. I still think the economy is going to weaken. I still think real estate's going to weaken. But I think the Fed heat is toned down a little bit. So that's what I'm trying to say here. So that's today's video. And until next time, peace out.